Hi, I'm Hubert Centers. Welcome to Absolute Wealth's weekly edition of Centers Strategies. Let's take a look at this week's strategy. Okay, in today's strategy, let's talk about the importance of knowing how to use the intraday tick indicator, which is basically the RPM gauge of the market. It's very, very important that you know the advantages of using this market internal, whether you trade stocks, options, futures, forex, whatever you trade. It's really, really important. And it's really best used for index futures. It's also really a useful tool for trading stocks and stock options and ETFs. So let me turn down the direct access to the pit audio here. Turn it down so it doesn't just aggravate you. All right, so the first thing we're looking at here, on the left-hand side of the chart, I have a 5-minute chart of the YM, which is just the Dow. If you don't trade futures, not a big deal. Take a look at the diamonds, DIA. You can look at the QQQs. You can also look at SPY, or you can follow something that kind of floats with the market, like a Google, Amazon, Apple, something like that, okay? So the first thing is this was the close from Friday over here. And you can see that you had a gap down situation, and the gap down situation did a half a gap fill, which is a very high percentage play. And then you also did a full gap fill. Now, after you get a full gap fill, you can see that it moved back down. Now, what you're going to look at on the right-hand side, you're always going to be going back and forth. You're going to be comparing the price action to ticks, and then you're going to be comparing the ticks to price action. So right now, as I'm doing this video, it's 2:17 p.m. on the East Coast time zone. So on New York time, you can see that we've put in the low here, we've pushed higher, we've pulled back, we've stabilized and held this little double bottom low here, and now we're pushing higher, pulling back, and pushing higher. Now, as you can see, anytime you get multiple plus 1,000, plus 1,000, plus 1,000, plus 1,000, plus 1,000 readings, those are extreme tick readings. Extreme tick readings mean I have shot all my bullets at the market, and now I have to pull back. So I'm going to unpause the ink, and as you can see, this is a 5-minute chart. If you want to compare apples to apples, what we'd have to do is change this into a 1-minute chart. So now I'm going to zoom in here. So now I'm zoomed in on a 1-minute chart, and let's get rid of all these other indicators because we just don't need them for this lesson here. All right, so now we're looking at just a pure 1-minute chart of price action, and we're looking at a pure 1-minute chart of ticks. Now, as you can see, I'm going to move this chart down just a little bit too. You can see that we've had multiple plus 1,000 tick readings. Now, what that tells you is that the market is stronger rather than weaker. So if you're looking for a late day rally, this is the type of price action and the type of tick actions that you're looking for to confirm that we will probably go higher into the close. So take a snapshot of that, write it down in your trading journal, and just note that anytime you get a nice thrusty move, then a pullback, and then another thrust, if you're getting multiple plus 1,000 readings, that's going to be your clue on at the close, you're probably going to get a little bit more of a rally to the upside. Now, you don't want to just buy at plus 1,000. What you want to do is you want to buy after it pulls back. So here's what you're going to do. And I'm going to give you the example on previous one. So this was a plus 1,000 tick reading. This would be tick hook 1, tick hook 2. You'd go long either at 0.1 or 0.2. This is a plus 1,000 tick reading. You'd either go long at tick hook number 1 or tick hook number 2. And a hook is just when it hooks up like this with this 1 period moving average. So right now you have plus 1,000 tick reading, and you've got tick hook number 1 right here. It's starting to hook, and then you just wait for the second one that would either be around here or up here. Doesn't matter if it's higher or lower. What you're looking for is a plus 1,000 tick reading, and then a hook up once, hook up twice, and then you're going to go long with a tight stop, either in the index futures, an index ETF, or a popular equity that you can play. You can also do options this way. Good luck, hope it helps. See you on the next video.